Welcome back to MB Capital Strategies. Today we continue with a European energy group, strong in gas upstream, politically suddenly extremely relevant for Europe, and yet a PE ratio around 5, and depending on the entry price, a double-digit dividend yield is possible. And that is the stock OMV. In episode 3 of my upstream series, we take a sober look at cash flow quality, at balance sheet strength, and at dividend power and the projects that could drive future cash flow. Just hard facts for dividend and hard asset investors. Who is OMV? OMV is an integrated energy group based in Vienna. Crucial for us today, upstream oil and gas production. Current production is around 340,000 barrels of oil equivalent per day. Over 50% of that is gas, and that's exactly what makes OMV more robust than many pure oil players, especially in the European context. What are the important regions here? That would be Norway with North Sea gas, then Romania with the Neptun Deep project, and the Middle East and North Africa selectively here. OMV is not a growth hype company, it's a cash flow worker. Cyclical but with very high payout potential, and that's exactly what we're looking for here. So let's take another look at how I'm invested here. In total, I hold 9 shares, entry price at €43.05, current price gain of 16% with €65, and a dividend I've already received of €28.20 net. The 52-week high and low respectively is between €38 and €51. Currently we are at €50.10. Analysts set a target here of €50.83 and Investing Pro sets a target here of €70.38. Let's take a look at the balance sheet from the end of 2024, where we have a complete year. Total assets around €49 billion, cash and cash equivalents at about €6 billion, and equity here of about €24 billion. The equity ratio is over 50%. For a heavily upstream-focused energy group, that's very conservative. Net debt is moderate. The debt to equity is around 0.5. In short, OMV has enough buffer to pay high dividends, handle capex for new gas fields, and cushion geopolitical shocks like Libya, the Russia exit. That's exactly what a balance sheet looks like that you want to see as a dividend hunter. Stable, liquid, and not over-leveraged. What is the operational strength? Revenue in 2024 was around €33 billion, normalized after the 2022 boom, but still solid. What is more important than revenue? EBITDA around €7.3 billion. Upstream production costs of around $16 per barrel. That is very competitive for Europe. Due to the high gas share, OMV is less vulnerable to pure oil price crashes than many US shale players. Yes, there were write-downs here too, Russia exit, Libya, and geopolitical issues, but the core operating business remains clearly profitable and cash generating. Now we come to the crucial part, namely the cash flow and also the dividend. 2024 operating cash flow at around €5.5 billion. A capex here of around €3.5 billion. That means we have a free cash flow of around €2 billion. The dividend for 2024, €4.75 per share. That corresponds to a regular dividend of €3.05 plus a special dividend of €1.70. Depending on the price, this results in a high single-digit to double-digit dividend yield. Extremely attractive for a European oil and gas group. A new dividend policy will apply here from 2026. 20 to 40% of operating cash flow as a regular dividend, special dividends if the cycle allows. This is classic upstream high yield. Very high payout in the boom, possible cut in the low, but long-term and excellent cash flow yield for patient investors. The crucial upstream projects, so the cash flow drivers for the longer term. The most important project is Neptun Deep in Romania, 50-50 joint venture with Romgas. The investment decision has already been made here. Drilling starts in 2025 and the first gas is to be delivered from 2027. Estimated reserves of up to 100 billion cubic meters of gas. What is the result of this? Romania will become one of the largest gas producers in the EU. OMV will become systemically important for Europe's gas supply. In addition, there are new gas discoveries in Norway, in Heidenmon, and a selective return to Libya, a portfolio cleanup, Malaysia sales, and others. OMV is clearly focusing on European gas upstream, politically relevant and potentially highly profitable. So, what is the current valuation as of January 2026? We have a price-to-earnings ratio of 5. We have an EV/EBITDA of about 3, and that is well below the sector average. The market is already pricing in cyclicality, geopolitics, and energy transition risks. For us, this means a very high current yield plus increasing cash flow from 2027-28 through Neptun Deep. This is not a buy and forget stock for the long haul, but a highly interesting cyclical high-yield asset with real substance. What do you think? Buy OMV, hold, or too cyclical for your portfolio? Write it in the comments and let me know. If you liked the video, I'd appreciate a like right here. If you're not a subscriber yet, I'd love for you to subscribe now if you don't want to miss any more upstream episodes. Also, feel free to check out my mining stocks playlist. There are surely some very interesting mining stocks for you there as well. Otherwise, as always, this is not investment advice, just my personal strategy. I wish you successful investing. Until the next video.